U.S. Farm Report on the road from the 50th Missouri Governor's Conference on Agriculture is brought to you by the Missouri Department of Agriculture, celebrating the determination and tenacity of Missouri's farmers and ranchers.
Welcome back to U.S. Farm Report this weekend. Well, I mentioned it earlier in the show, but here in Missouri, really in the bullseye of some of that drought this year, still seeing the impacts. We've had a little bit of rain, but when you look at hay supplies, I mean, there are a lot of concerns into rebuilding this cattle herd. We have seen some pressure as of late, though, on cattle prices. So what dynamics are at play right now, Scott, that have kind of changed that a little bit?
Well, so I still think it's very positive from a cattle price perspective, even though we have backed down in the last few weeks in terms of prices. I think we might be seeing some signs of slowing demand in some cases that have been at play. But I'm still relatively optimistic when we look ahead that we're going to talk about cattle prices that could continue to be at record levels because we're not building the herd. All the data we have available to us, whether it's heifers that are on feed or beef cow slaughter, tells me beef cow numbers will be down January 1 of 24. Frankly, could be down January 1 of 25.
At the same time, we are seeing some profit squeezes take place for the major packers. And so when you look at the interesting dynamic and how those tables have turned, what impact, what ripple effect could it have on the livestock industry that maybe we're not talking about right now, Scott?
Well, so I think certainly we're going to see some packers that are going to struggle to survive through these very tight cattle supplies. And although we may not need that capacity today, when we talk about rebuilding the herd, which I think does happen at some point, that capacity will be much more needed. This idea of how do we cooperate with the different segments of the industry in a way that allows the industry to grow. We want to grow demand. Last thing we want is somewhere along the way to be a bottleneck that keeps us from growing demand for beef. The cattle industry's done so well at this, it has to continue, and that's coordination along the way of all marketing segments.
Bill, in the latest supply and demand report from USDA, we did see them kind of increase the milk production and forecast, some of those price forecasts, but reduce its production forecast. So when you look at some of those changes, is there a geography that we're seeing milk production on the decline?
It's still kind of scattered out throughout the country, but we are seeing a slowdown in some of the western states, especially Texas and Mexico. So New Mexico has been on a downward trend. Florida had been, they've kind of bounced back up a little bit. So it's really kind of scattered throughout. Midwest, actually, especially the upper Midwest, have been holding pretty decent. South Dakota's been one of our largest growing states as far as milk production goes. And in the reduction that we've had, or at least in pound maps coming in, some a little bit lower count numbers because they're originally taking advantage of those higher cold cow prices to help offset the really, really tight margins that we had here in the summertime.
Just a month ago, we were talking about these impressive butter prices, and maybe this holiday demand was coming in a bit early. Now we've seen butter prices erode. What is going on there?
Well, from what I've been able to glean, it kind of ended up as one of those classic short squeezes for where one big traders got caught out of sorts with the amount of butter that they have on hand for the amount of demand that they have, and really had to jump in the market based on for whatever they needed to have. And now our prices went a lot higher than I believe anybody thought. At a time when they typically go higher, but now that they drop back off their place in that area where I thought that they would be back in the middle part of the summers, we're looking here at the fourth quarter of the year.
Carly, I know you focus on Title I of the Farm Bill. We're talking a lot about prices, but when you look at reference prices, we've seen some forecasts out there that say in a new Farm Bill, but raising reference prices, it could cost anywhere from $20 billion to $50 billion. Where are those numbers coming from?
So those numbers are based off a straight percentage increase across the board for all covered commodities. And that's not exactly what Senator Boozman is looking at. Senator Boozman is looking at each covered commodity and taking a more surgical approach. So those scores can fluctuate based on the Congressional Budget Office and what other pieces are in those proposals and other interactions across farm policy. So while those numbers are out there, we do need a significant investment in the Title I safety net and other aspects of the safety net as well. But those numbers may not be a reflection of what Senator Boozman is looking at.
But do you expect raising the reference price in Title I, do you expect that to continue to be the biggest sticking point, the biggest hurdle in getting a new Farm Bill written?
Senator Boozman has been across 18 states, Farm Bill listening session, and that is the number one ask we hear across all meetings, across all commodities. that we need to update the safety net. It is based on 2012 data. And if we lock producers into another 5-year contract of outdated reference prices, that safety net is not going to be a viable safety net.
Thank you all for joining us. We appreciate it. All right, we need to take a quick break, and then we'll have much more right here on U.S. Farm Report.